options are something which have not been done on chain in 2021, and it will be a huge market, as it is a huge market everywhere else in every other market. In TradFi, options are the biggest market. With this idea, we came on chain, but what we understood as we developed protocols over time is that the notional interest for options was lacking, and eventually we understood that since options are a very complex thing for users to understand, it is better to package it in a different way for users. They could short Bitcoin and collect the funding reward. Essentially, this would mean that any user who has 1 BTC can come in, short 1 BTC, collect the Lombard yield, and then collect the funding rate on Bitcoin. Since Bitcoin is a huge asset, funding rate doesn't change a whole lot in a wild fashion, and year on year you can just collect free yield while staying absolutely delta neutral. Your principal doesn't really lose money.
Hello everyone, welcome to a new episode of Voice of Web3 podcast powered by CoinGay, where we speak with heavyweights and explore opportunities in Web3 space. Today we have an amazing guest, Salman Nasir, co-founder of Polynomial Protocol. He has a background as a software engineer and a blockchain DeFi enthusiast and options trader. Please meet Salman. Thank you for joining. How are you?
Hi folks. Thanks for having me on the podcast. I'm doing very well. How about you?
Yeah, likewise as well. Everything is going pretty well. So before we begin, I just want to say a big thank you for our audience, for your use. And if you still don't subscribe to our channel, please go and tap below the bottom subscribe. Do any activities below the video, share your thoughts, share your questions. We are very grateful for these activities. Today we're gonna discuss, of course, crypto derivatives, as you have a background in that. We discuss investment opportunities in the industry and layer 2 infrastructure. But let's start with your background, because you are a tech person. You came from the software engineering, and it's really interesting to know how did you come to crypto space and options.
Sure. I think if we kick it back a little bit earlier, go way back, I think if not for crypto or blockchain, I would have probably been a software developer or involved in AI. As such, I've been professionally involved in this industry for the last 4 years now, with Polynomial throughout the whole duration. Initially, I got introduced to this industry much earlier though. When I was studying in university, me and my co-founders, who are, all of them I've met in my university as well, we were organizing a hackathon in which Consensus happened to be the title sponsor. And initial foray and information for me about the industry kind of came from there. Consensus, as you all know, are the group behind a lot of applications, primarily MetaMask. And when I first heard about it, to be honest with you, it didn't make a whole lot of sense to me. Around that time is also when there was a lot of ICOs and stuff. I really didn't understand most of it, and for the most part I thought it was vaporware, and I ignored it for the longest time up until about when I had a job in 2019, and it started to come into my purview a lot more. And the difference from before is the fact that there's a lot more to do on chain now than before. You could take a loan, you could do a lot of things which were not possible a little earlier. A lot more primitives were kind of starting to come, and this is initially what piqued my interest as well about the industry. Obviously, like everyone else, I've heard about the industry 2013, 2015, and 17, but it only took up to 2019 for me to actually come into the industry. And after that, I was super interested. And just like before in university, I just go around with my co-founders and attend a lot of hackathons. And slowly, like that, is how we started Polynomial.
And maybe you remember like how much was Bitcoin when you joined the industry?
So that kind of depends, right? When I first heard about Bitcoin is in 2013. This is literally when I was probably like, too young to even be on or like buy any of these coins. That was more like a news clipping. There were a lot of news about the founder of Silk Road being caught, and things of that nature. You would see it in the news, and you'd always associate Bitcoin as such with something which is only used by criminals.
Yeah.
And 2016 and 17 was kind of the same, but like something new that people were very interested about. Much like how AI is today, that's how it felt in 2017 when I also first heard it.
Yeah, because I remember when I bought some like Bitcoins, it was COVID. And I was very skeptical about crypto, about all this story. It's kind of like Ponzi schemes for me. And but when COVID started, I saw many news about like Bitcoin crashes, crypto down, and like the old friend of mine told me that it is a really good time to invest in it. And like this time was very stressful for everyone, and that was the very first time when I just tried to buy something in crypto, and that was Bitcoin. So yeah, and I'm really interested to know from all like community when they heard about Bitcoin and when they like buy or jump into the industry.
Yeah, similar, very similar story. I was a bit active in Twitter, and you'd find people on Twitter talking about crypto, and that's just like as you all know, it's a big community of traders, users, and innovators as well on Twitter, and that's how I really got closer to the crypto community at that particular time. But as such, during my day job, I would trade options, and I would trade in the trade options in the Indian market, and this also kind of contributed into me slowly looking at crypto as such, because crypto was one of the places which would offer a whole lot of volatility, the same kind of volatility that you would see on options in any of your markets, like let it be US market or Indian market. You would see that on the spot itself of crypto. And this really made me interested in this market, and I wanted to know more. And the more I knew about it, it felt like a rabbit hole that I couldn't get enough of. And that kind of I think it kind of sums up the origin story of most of us in this industry at this point. As such,
Yeah.
go ahead.
Yeah, just curious, why option? Why options?
Okay, so let me paint a picture about what it looked like in 2021 when we started. When we started, there were about, I think, 8 to 12 option protocols in crypto, or in Ethereum as such, where we were developing this. And the problem that everyone had was the fact that apart from the centralized options market called Deribit, none of these 12 protocols was usable for any meaningful amount of trade. You could buy one option and that was about it. You could buy 10 options and that was about it. But for most users, or for any kind of adoption, you couldn't use it. So initially, Polynomial started with the idea that you could take 8 or 12 of these protocols. And the curious thing about how options work is that if it's a European option, if it
Mhm.
has the same strike price and the same expiry, it is almost composable, right? It's fungible. You can have the options of one exchange, and can have the option of another exchange. The return would be the same. So our initial idea was, why don't we, since the liquidity is fragmented across 12 protocols and you can't actually do trade in any one of them, we thought, why not just aggregate all of them and give it to the users in one place? And that's how we started. We were the finalist in Hack Money hackathon by ETH Global, and we went on and forward from there.
So your platform started as an options platform, but has now evolved and layer 2 specialization.
Yes. So I can get a little bit deeper into how that
Yeah.
happened.
And
Would you?
maybe you can just in simple words explain what your platform about.
Sure, totally. I think it makes sense to kind of understand how we evolved to this point, and I can totally give you in layman terms what it does right now. So we were an option aggregator, and I think we were a little too early for our idea. So the good thing about bad ideas is that you can be very early to them, and it is about similar as it being a bad idea. And our initial thesis was, options are something which have not been done on chain in 2021, and it will be a huge market, as it is a huge market everywhere else in every other market. In TradFi, options are the biggest market. With this idea, we came on chain, but what we understood as we developed protocols over time is that the notional interest for options was lacking, and eventually we understood that since options are a very complex thing for users to understand, it is better to package it in a different way for users. And we started building a protocol for option walls. Essentially, a user can come in, deposit money, and get yield. How is the yield made? We are selling options on your ETH, on your BTC every week, and you will get a yield for the same as a premium. Over time, a lot more protocols came in, and you could see that the yield was not growing accordingly. Rather, it was actually being stifled, and the yield was going down. So we pivoted into perps, because this, unlike options, is something every single user in options in crypto knows. Everyone has traded before. Everyone knows how this works, what longing one Bitcoin means, what longing one ETH means. And it's easier for a user to onboard into derivatives as such. Over time, we've actually offered 75 plus assets, done 5 billion plus in volume, interacted with 120K plus users on chain. And we were primarily building on optimism, and they've been really, really good to us over the years. But what we saw eventually is that people who are trading are really, really interested about profit.
Of course.
And that's very counterintuitive, right? They're very interested in profit, that building something like a trade exchange on a generalized L2 like Optimism would not make sense, because on the same L2 maybe someone else is minting an NFT. And because of that, your trade doesn't go through. That doesn't feel so good, especially when your P&L is jumping up and down a lot. Nor does it feel so well when your liquidations don't work. And with this idea in mind, we understood that the new users that are coming in 2024 or 2023 or 2025 needs specialized execution, and that needs specialized block space. And this is the idea with which we made the L2. Now, making a long story short, what is polynomial L2s today? Polynomial L2 is a layer 2 solution that specializes in derivatives and offers users the same through the use of a native liquidity layer. What does that mean? That means there is a liquidity layer a passive user can invest their stablecoins in, and this liquidity layer will back all the trades that happen on Polynomial Exchange, as well as other ecosystem derivative partners that we might have.
So, to make a conclusion, maybe.
Yes.
How does layer 2 infrastructure improve the trading experience?
Sure. So there's a bunch of customizations you can actually do when you run your own layer 2, which is specifically for derivatives, right? One thing is your gas price isn't as high as it used to be. And traders like to take a lot of trades. If you're working with other market makers, they don't want to pay gas fees. All of this could be solved if we as a team just sponsor the gas fee. And that's kind of what we've done with Polynomial, right? Any user who onboards onto Polynomial does not have to pay any gas fees for trade execution. And this is one big unlock we had. The second big unlock we've had is that all of these operations that happens in the background, when you take a trade, when you long something and click the button, there's many things that are happening in the background. And all of these also have downstream effects because gas fees is very low when you're building your own L2. This also makes trading itself faster for the user. So namely, very low or no fees and faster execution.
Yes, got you. So let's a bit speak about investment opportunities. I mean that it's the demand for financial literacy is really grow, and the more young people want to know any different opportunities, how to make money or where to invest, because there are so many opportunities in crypto, warm this crypto and the low economy right now really warm the young generation to know a bit early about any type of investments and how to make money. So what the best investment strategy or what the best investment instruments do you see for this year or maybe upcoming years?
Okay. Again, so this is a personal opinion of mine. I think when you're a young person, the best investment path is to bet on yourself rather than bet on a coin. But if it's completely financial, if we look at the last year completely in crypto, there are three big trends that have come up, right? One is crypto AI. Another one is RWAs, real world assets. And the other one, funnily so, is meme coins. Now, at Polynomial, we don't actually be partial to any of this. We have markets for each of these sectors. If it's RWA, we have Ondo as a market on Polynomial Trade. If it's memes, we have tons of memes on our exchange. If it's crypto AI, that is also served. Especially in terms of crypto AI and RWAs, we are having projects being worked on right at this moment. But coming back to your question about financial literacy and investment, I think compared to 2021, 2024, we see a lot more people are more educated about financial derivatives as such. This industry actually grows a lot year on year, and I think for a user getting in right now, it's best to just take the top market cap coins and buy a basket of them. In terms of if I have any specific recommendations, I don't think I'm a financial advisor as such, but Just like me, I'm betting on the industry, and if you think this is a space which needs growing, or you think it'll grow, it's best to just go for a basket or an index.
Yeah, I'm curious about, and even you told that derivatives is a bit harder than just invest in some tokens or just like do even like futures on Bitcoin on different indexes, for example, long or
Hmm.
short Bitcoin, for example.
Hmm.
It's
Hmm.
a bit harder, but it's possible to jump into even this like instruments.
Hmm.
So I wanted to know your opinion. Are these instruments like derivatives and there are more features how you can make some money are becoming popular? And do you see a potential of these instruments?
Um, so what I'm understanding is you want to know if there are new strategies that are coming up, which is really good for investments. Is that right?
Not only for investments, just for making money, but because even like crypto exchanges are involving different features for making money. So like, do you see a potential of these new features, or it's only for people who has like experience, for example, 10 years in crypto?
Um, no. So I would say a lot of strategies are packaged already as products in crypto right now. So,
Hmm.
for example, one of the biggest, biggest products to come or protocols to come out last year and the year before is Ethena. Essentially, what they do is uh, they have funding rate apps running on their platforms where users can just go in and passively earn the yield, and they will do all the work behind the scenes. So it doesn't really need a user to have a lot of experience, where there could be service providers providing the same. There's a bunch of strategies that have come up, and there's also real world assets itself. So let's say you know nothing about finance today, but you could have yield from treasury bills today, right now on chain. You could have yield from funding rate right now on chain. So I don't think you need 10 years of experience in crypto as such.
Yes. So how do you see tokenized real world assets impacting DeFi?
Mm, tokenized real world assets is, like I said, one of the biggest trends last year.
Mm-hmm.
And I think this is something which can grow a whole lot in the coming years. I remember reading something by Standard Chartered the other day saying that today the RWA market is $20 billion in how big it is, and by 2024, just a decade, it could be 30 billion. And I kind of share the same uh, view on it, because essentially what real world assets is doing is that it's kind of globalizing the access to any of the assets that they offer. Let's say treasury bills, right?
Mm-hmm.
Before, treasury bills would be bought by big institutions or maybe US citizens.
Mm-hmm.
Today, with real world assets, anyone around the world can go in and invest in real world asset that is a treasury bill and get the yield. And this is further shown by the fact that today, as it is right now, stable coins account for 1.8% of all total US debt. So, we are actually driving the space forward, and real world assets as such have a lot more ground to clear. I think it would even reach a lot higher percentage of total US debt as it goes forward.
Yeah, and you mentioned about stablecoins, and I think it's really hot topic for this week. Like Bloomberg newsletters, all about stablecoins, and different like media made a report about stablecoins. And I live in Europe, and I have the message about USDT, um, that about MiCA regulation effect. Some of USDT operation in one platform will become unavailable. And this
Mhm.
message in USDT, this message I had like 2 days ago. And do you know any take on that about USDT if these stable coins will survive, or what's going on?
Specifically about this USDT case, I don't think I'm well read on that, but regulations, I think, like, as the space grows forward, regulations particularly will happen as more and more people start using it. Governments wouldn't want to be on the offside of it, especially when you also have the other side where a lot of users lose money on it. I try to take a very nuanced view of this, to be honest. I don't think regulation is necessarily an enemy. It'll happen if you want it to or not. There's no other way about looking at it. But the key to unlocking mass adoption in DeFi would also mean that there are people who are, or like governments who'd want to regulate it. There's one side that, like, it was unregulated before and it gets regulated now, and there's a lot more rules. I try to look at the positive side of it, wherein when clear regulations come in, there's a lot more um, visibility and understanding and clarity for more institutions and more people to kind of interact with DeFi and on chain. Um, before, a,
Yeah, go, go.
yeah, before a lot of institutions would kind of not even touch crypto because there were no like regulations. Now, if the government itself tells you, hey, these are the rules you should kind of follow, and if you do, you can have DeFi. This also means that you'll start to see a group or a bunch of companies who actually um, go ahead and introduce companies which are regulatorily compliant, but at the same time, they're also on chain and they also kind of push forward the space. I think clearer regulation also kind of brings in founders um, who are like who before would not have come into crypto. And I think, like, as a whole, it might be a positive effect longer term.
Yeah, so it's in general, it's about crypto adoption.
Yes.
Like a part of people who are not in the space, they see that it's regulated, it's kind of official, and probably it's not a scam, so you
Yeah.
can jump
Like,
into it.
it's a
But
very curious point, right? Because today there's supposedly 500 million people um, in crypto. To give you a contrast, internet as such had, like, the same number in 2002. So think about it, right? We are where internet was in 2002. And if you really think about what happened on the internet since 2002, there's a lot of wild stuff that happened. Most people, you and me included, right? We have our jobs on the internet right now for the most part.
yeah,
So, like, that is where we are right now. We're so early in terms of adoption that regulation is obviously going to happen. This is about the same time, like, around the time for internet as well, when a lot of regulations started to come in. It's a natural process.
yes, that's true. That's true. And like our industry is still missing this education. I saw there are many companies that integrate their courses into universities, but there is still a big gap between like education and crypto. Yeah, so back to yield derivatives, like do you think on-chain derivatives or DeFi strategy will lead Bitcoin yield generation?
Again, I think I have a very nuanced hot take over here. If you're looking at the normal person,
Okay.
Bitcoin is an asset which grows 60% over 4 years, every 4 years since it's been live, right?
Yeah.
Um, for the normal user, they're looking at 6-7% yield in the normal world. And for us, it seems like a very small number. Um, Bit so it kind of leads to the question: does Bitcoin even need a yield? Because it's been growing uh, with a certain percentage for so long. But to answer your question again, um, even though I don't think Bitcoin might not need yield generation, it is going to happen, and it has already happened with Lombard Finance, who offer liquid staking Bitcoin. A lot of DeFi work is being done on um, platforms like Stacks or RSX. I think, like, it's not a question of if it'll happen. It's a question of it's already happening, and it's more like what more can happen in the term of Bitcoin yield
Yeah.
generation.
What innovations do you foresee in this Bitcoin yield generation, if we can
Yeah.
call it?
So yeah, sure. It's a bit like a simple and powerful, right? Something we've been very bullish on at Polynomial, and something we're working on, which will be live in the next 1 month, is what we call multi-collateral. So think about the world today. You go to an exchange, you have to have USD to long or buy or sell an asset. Um, what we are going to offer going forward in a month is you can come in with your Bitcoin and you can trade. You can come in with your staked ETH and you can trade. You can come in with your staked Bitcoin and you can trade. What this means is, for the user, the asset that they have is already growing in yield, maybe 6%, 5%, and
Mhm.
Bitcoin itself is also going up in price,
Yeah.
and they can trade with it. Something which really interested us at Polynomial is the fact that a user could come in with a staked Bitcoin, let's say LBTC,
Mhm.
and they could short Bitcoin and collect the funding reward. Essentially, this would mean that any user who has one BTC can come in, short one BTC, collect the Lombard yield, and then collect the funding rate on Bitcoin. Since Bitcoin is a huge asset, funding rate doesn't change a whole lot in a wild fashion. And year on year, you can just collect free yield while staying absolutely delta neutral. Your principal doesn't really lose money.
Yeah, that's really great opportunity. And what do you think on Bitcoin reserve in the US? How you how you see it help the economy, or it help the crypto space? Like, what's the result of this reserve?
I think in the last 1 month, probably, Bitcoin strategic reserve was the biggest news. Uh, a lot of people were talking about it leading up to the presidential election. A lot of people were hopeful, especially after Bitcoin ETF last year. Uh, Me personally, I'm cautiously optimistic about Bitcoin strategic reserve. It's you kind of get into a different league, right? When something like a US government essentially says this asset that you guys know is digital gold. So there are, like, it's not about the news itself that I am very excited about. It's the downstream effects, right? When your own government recognizes this, the founders from US benefit a lot because they've been legitimized by the government. This also means that if US thinks this is important, other governments will also buy Bitcoin. Other institutions will also have to come in. You can already see countries like Bhutan or El Salvador already have their own reserves. This would also mean that financial institutions would have to have a crypto plan. and that includes every single bank, every single hedge fund that you know, they would have to have something to do with digital assets. All in all, I think that's a move that brings in a lot more adoption than what might seem um, like it will bring in today. In terms of governments, things move in cycles of 5 years or 10 years. So today it might not seem like a big news, but over time, the legitimacy and the visibility that it brings is a whole lot.
Yeah, everyone should integrate crypto because this like 5 million or how you count it, they have crypto and they need to make a transaction, even like not only in the crypto infrastructure, but they want to buy something and they need this in bank accounts and other like options how to use it. It's obviously, yeah. And if we speak about layer 2 as your project related to it, can you name some layer 2 gems in this year 2025?
Again, as I said, I'm not someone who would give a lot of um, financial advice
Investment
as such,
advices, yeah, I know.
investment advice, but there are a lot of things happening around ZK that I know of. A lot of DeFi is happening, something which I personally am bullish on Bearchain and Sonic as well. Um, of course, I'm not saying go ahead and buy the token, but rather just go ahead and look at the protocols which are driving the space forward there, and make your own decision as such.
And are there any crypto unicorns that you are looking for? You can, if you can't name the projects, you can tell us the directions. As I understood, is RWA, layer 2, obviously AI agents, and what else?
Um, I'd look much closer at crypto AI as such. I think that space is still very underexplored. Like, think about we have foundations for crypto tokens now. Think about if governance as such. This used to be something which took a lot of paperwork, and it took a lot of people having to agree. If that could be done with AI, there are other things as well. For example, even in the last few months, we've had so many hacks in the industry, like namely Bybit hack. Um, it kind of you kind of wonder if uh, having AI there could have rescued some of those funds. I'm not specifically talking about Bybit, right? I'm talking about all protocols as such who suffer through hacks. I think it's severely under explored, and over the years you'll see a lot more things happening in that direction. RWA as such is going to compound a whole lot over the coming years. That's mostly, I think, like DeFi, RWA, crypto AI. This is what I personally am bullish on.
And what about meme coins, altcoins? Many crypto crypto like community are waiting for altcoin season, but they are I think they are really upset. Even me personally, I'm really upset about what's going on because we are for a long time waiting for this season. And how you see this?
And specifically about meme coins, unfortunately, I'm not like someone who can see the future. Obviously, I don't know what goes up, right? But what I can tell you about meme coins as such is they're extremely predatory markets. And this is like something no one wants to hear, but this is the truth, and everyone kind of should know it. Especially spot meme coins are making users a lot poorer than they think they are. The fees on meme coins generally add up so much that eventually the amount of people who actually end up making money is almost zero. I understand every economic endeavor is to kind of grow or to profit. Um,
Yes.
but while saying that, like for example, if you do a spot trade of a meme coin, you're already losing 1%. You take profit, you're losing another 1%. If this is something you love, well and good, then the better option for that would be to actually trade perps on the meme coins. At least you wouldn't have 1% fees. And we offer a lot of meme coins on our exchange as well. Like Polynomial has very low fees. That can make sense. In terms of altcoins, crypto kind of works with liquidity cycles. Essentially, there are times where there's a lot more liquidity happening in the market, and then there's a lot less liquidity in the markets. And right now, what's happening is everyone's kind of looking at Bitcoin, and that is where the market and the institutions are. And there will be a time when alts will come up, and I would say, like, any of the themes that I've mentioned before are probably primed to really benefit from it.
Yeah, and I understand that even like meme coin, it's more speculative thing, and we should be aware about it before get involved.
Yeah.
Can you share, like, as you know, different instrument like derivatives, options, how you like what instrument can you like safe instrument can you advise for those who are like newbies in the industry? For example, staking. I think it's really a safe instrument.
Sure.
Something similar.
Yeah, for someone who wouldn't want to lose a lot of money or would want to keep the money that they have properly protected in DeFi, there are a few options that you can go to, right? You can stake in assets which grow over time. You can, and that could be RWA or otherwise.
Mm-hmm.
You could lend your own asset, and that can get you an APY. You can borrow, and in some cases, you'd get an APY there as well. For the normal users, there's a plethora of choices in those three things itself: staking, lending, borrowing. That would be where I would concentrate my time on.
Yeah. Thank you. You like give us a lot of options where to make a focus and investigate and bring the value for everyone. Can you share your like ambitious plan for this year, for you personally and for project?
Sure.
Yeah.
Personally, I think, like, most of my time is dedicated to the company itself. So I don't think there would want to be like a personal ambition or a professional ambition. I think it's the one and the same for me, at least. Where we want to reach with Polynomial. I already said there are three particular themes that I've seen. It's crypto AI, RWA, and meme coins. And we want to dig much deeper in all three of those narratives or trends that I mentioned with Polynomial. So, namely, we're bringing in multi-collateral. You want to trade with your WIF, you want to trade with your Pepe, you want to trade with your BTC. You can do all of that at Polynomial soon. Many people, with the advent of pump fund, they would like to participate in a lot more speculative nature trading. This is also something we are working on with permissionless perp markets. That means that any user can come in and bring up a market for anything that they want. This is also something we're bullish on, and in terms of by the end of the year, currently Polynomial is at 8 mil TVL. We'd want to get like 10x of that in terms of TVL, and in terms of volume, I don't think 10x is the limit that I would choose.
No limited.
Volumes actually increase as more and more people start trading, and as I mentioned before, there's also strategies which you can use to earn yield but not take a loss with perps.
Yeah, that's a great option. Yeah, and the last question is what piece of advice you give to our audience who is like newbies or who are in this space?
Um,
Something motivating.
I understand. I would say that to keep updated on the industry itself, as a newbie, it's super, super easy to think about how I can make a lot of money. And everyone starts off like that, right? How can I make a lot of money in 15 days? You'd be surprised at the amount of money you can gain by being slightly long-term minded. I'm not saying like, be 50-year long-term minded, but like just being slightly long-term minded than trying to be super short-term. If you're thinking about something in a day or two, more probably than not, you're going to lose all your money. But like, if you're going to stay with this market, this whole industry itself compounds multiple percentages every year. So it pays to just stay in here. Like, when I was starting out, I think just being educated about crypto and using the products itself made me money, right? With airdrops and the other likes. So I think that is what my advice would be. Stay wary of people trying to tell you can be rich tomorrow. This never happens. And like, be more educated about the ethos of crypto.
Yeah, that's a good piece of advice. I'm completely agree. And I hope everyone enjoyed this episode. Please leave the comment below how it was. If you have any thoughts, please share with us, ask the questions, and see you again. We're very welcome to have you today, Salman. If you have
Thanks for
any
having me.
updates or any exclusive news for us, you're very welcome every time.
Yeah. All news about Polynomial can be reached at polynomial.fi or on our Twitter page. Again, the same Polynomial FI.
Yeah.
Thanks for having me.
Yeah. Thank you for joining us today.